We are now in the year 2024. It's been a great journey from last year. And this year, I'm hoping that a lot of you who are watching this are looking to take your trading skills to the next level. Now, in order to do that, at this point in time, you guys are fortunate because you get to actually be in a space where you can learn without losing a lot. And this brings me to the reason why that's possible. The reason why that's possible is because of proprietary firms, or for short, prop firms. So I'm going to list and I'm going to explain why and how to choose the best prop firm for you this year, 2024. One of the things that often occurs is that when people open up their accounts in order to actually trade, they're using a live account. And many times, people have not yet honed their skill. People don't yet know what their edge is. People are still trying to understand themselves in terms of their psychology and how they respond to risk management. All of those things are actually things that you need to learn and grow in your skill in order to be able to trade correctly, consistently, and profitably. Once you learn what you need to do, then you can take your trading to the next level. So why choose a prop firm over using your own money? Well, you will, number one, not lose a lot of money before you hone your skill. If you use your own money, you may actually blow your account before you even get anywhere in your progress in honing your skill and getting better at trading. Another reason would be what my dad has taught me. He used to be a business owner, and he won a lot of awards running his own business that eventually spanned 3 countries. And one of the biggest things that he helped me to understand is that no matter what, even if you have the money to use, it is always better to use other people's money. Why? Because you significantly reduce your exposure to risk. And when you reduce your exposure to risk, you are able to actually do more and get better and progress more effectively. So another reason is that when you trade other people's money without having some skin in the game, it removes all pressure. And it's basically like you're trading a demo account. It won't help you hone and understand your psychology and understand yourself. Whereas with a prop firm, you would still have some level of skin in the game, but it won't be enough to hurt you or seriously take you out financially during your times when you're learning and during the times when you're still trying to hone your skill. And so there would still be a healthy level of pressure, which you need because that's part of trading, but it won't be a pressure to the point that's going to completely break you and wipe you out. Proprietary firms are basically like your sweet spot when you are trying to make trading your next big career. Okay? So these are the reasons why you should use a prop firm first before using your own money. So now that we understand why a prop firm is the best way to go, let's look at what are the things to look for to find the prop firm that is perfect for you. So, number one, how long have they been around? Okay, that's important. That is not to say that those who just started recently are not good. That is not to say that they're not going to be good in the future. However, to be safe, you want to always go with a prop firm that has been around long enough and that has a solid track record that you can measure and use as a way to be able to have peace of mind that this prop firm will work for you. Okay? Number 2, are they in a country or location that is highly regulated? This is important because if they are not, you are going to be more in danger of being taken advantage of and conned, right? And scammed. You do not want that to happen. Again, that doesn't mean that the locations and countries where there's lower regulations, it doesn't mean that those prop firms are not legitimate. Again, just like the point number one, it just means that you open yourself to a higher level of risk if you go with a prop firm that is in a low regulation or no regulation location. Okay? Number three, how much payouts have they generated, at least over the last year or two? This is very important because, again, you want to be able to see if this prop firm is paying people and if they are also capable of paying you as you grow in your trading career. If they're not able to do that, or you can't even find some kind of trail or track where they do have a level of payment or payouts where you can find it, where you can vet it, where you can check it, if they don't have that, you should probably stay away. The next reason is, and this is a very key reason, are their rules compatible with your edge? Are their rules compatible with your edge or your strategy? Okay, now this one, you can't really, unlike the other points that I've mentioned, you cannot really test this or know this right up front. This is something that you're going to then have to test with different prop firms. So once you've used the first 3 points to check if this is a legitimate prop firm, then the next thing you want to do is to try those prop firms and test them to see where your edge works the most. And once you find that, that's usually the one that you probably want to go for, at least at the beginning when you get into some kind of momentum. Okay? The next reason that you want to also look for is, are their costs something that you can handle? Because all of them have costs, but some of them are more expensive than others. You want to look for one that you can handle their costs. A lot of prop firms, especially the really good legitimate ones, many of them tend to run promos. Why? Because they've understood that people often blow accounts. So because people often blow accounts, they know that it's going to add up. And so as a result, they often offer promos in order to help those who are trying to learn, to make it more affordable for them to continue their progress. And so you want to look for a prop firm that also has costs that you can handle. So the next reason that you need to look at when assessing a prop firm is their profit target, the drawdown, and their max contract sizes. Why is this? The metrics matter in the way you trade because, like in my previous video, your risk management comes down to your metrics. So what you want to look for is something that is compatible with the metrics of your edge. So for example, generally a 50K account for a futures prop firm usually has a profit target of 3,000 in the evaluation and a drawdown of 2,000. Some of them have daily drawdowns where when you hit the daily, which is usually about 1,000 on a 50K account, when you hit that, for some of them, you're done for the day. For some of them, your account is over and you have to reset or renew. And so you need to look at all of those to see what best works for you in being able to help you to pass an evaluation. Okay, so the ones that sometimes have a daily drawdown might not work for you. For other people, it might. The ones that have a higher or lower profit target might work depending. For some, have a higher or lower drawdown, but generally speaking, you have to be able to look at those metrics to again determine if the metrics for your edge work well with their metrics. The next thing you need to look for is consistency rules. Now, what is a consistency rule? A consistency rule means that what is the percentage of your highest trading day to your final overall trading balance. So for example, say you have a $50,000 account and the profit target for the evaluation is $3,000. If the consistency rule is 50%, that means that one day cannot be more than 50% of your overall profit target. And so in this example, because your profit target was 3,000, then one trading day cannot exceed more than $1,500, which is 50% of $3,000. And so you have to be able to look at the consistency rule and see again if that works for you with your edge in passing an evaluation. The next thing you also want to look for is the number and sheer volume of community of traders. This is very important because camaraderie is a big deal in trading, because a lot of it is psychological, a lot of it is emotional, and having other people who are going through what you're going through definitely helps. And we all learn differently. And so some of us will learn by just looking at what other people are saying, looking at what other people are doing, looking at two people discussing different things, and you pick out your own information and data from what they're saying. Having community tends to help, and sometimes it's for emotional support, and sometimes seeing other people struggling and then making it is also inspirational in helping you to get there as well. So community is a big deal. We were created for community, and so community tends to help a lot of us, especially when we're going through very difficult times in trading. So you want to look to see if a particular prop firm has a healthy community, whether it's on social media, whether it's on Discord, whether it's on Telegram, or wherever else there is. You have to see that there is some way that they have community of traders that you can connect with that will help your trading journey. And the final most important thing is customer support. Why is this important? It's not important so that they can answer questions that have already been answered a million times, which is what happens, but it's also important because if there happens to be a question that you have that cannot be answered by the community or by their website or all the information they have, you want to be able to have ease of access to support and to have support that can answer your questions fairly on time. I would say within 24 to 48 hours, that can answer your questions on time in a timely manner enough for you to be able to move forward with your trading. You do not want to go with a prop firm that takes forever to answer a question, because if you happen to have a question that's very difficult to answer and they can't answer it because they're not getting back to you, that is generally a telltale sign that you probably shouldn't work with that prop firm. Now, there are times where you might ask a question and it's already been answered. So it's also important to look at their support page to make sure that the question you have has been answered and can be answered for you if you check them out. Okay? So now there are other things that I'm also going to point out, probably not as important. Some people might disagree, but I'm going to tell you why it's not as important. One of the ones that's not as important is the payouts. And let me explain. The payouts are not as important in the sense that regardless of how they pay you, and if they are paying properly, everything else checks out, the payout doesn't matter. Why? Because you want to find the prop firm where you can actually thrive. Because if you thrive, then you'll be profitable. If you're profitable, it's really not going to matter how they pay, because you're going to get paid if you're profitable. Okay? So payout is not as relevant. Okay? It really isn't. As long as they pay and they pay on time, it is not as relevant. Don't get too caught up on that. because it's better to find a prop firm where you will get profitable effectively and quicker than to find a prop firm that has some kind of favorable payout that you feel that you need. Another one that, again, is not as important, but I'm also going to mention, is the unrealized drawdown. Okay, again, this is one that I used to also hate, but I've come to understand that it is actually irrelevant. And here's why. I'm going to use an example. So, say for example, you made $1,000 in one trade. Okay? Now you're up $1,000 in your balance. Say the balance initially was $50,000. You are now at $51,000. With an unrealized drawdown, what happens is if you go in on the second trade and it goes up 1,000 and comes down about 500, and you come out, you exit the trade at 500, your drawdown reduces by 500 because you actually hit 1,000 at your highest peak in unrealized gains. So what's going to happen is that your drawdown will be affected. So if you had a drawdown of 2,000, for example, after that second trade, your drawdown will now be at 1,500. But here's where it gets interesting and gets simpler. Now that it's at 1,500, it is no longer at the highest point of 2,000. So every trade you do after that, if it never gets anywhere close to 500 again in a trade, it's no longer unrealized drawdown. Because the only time it's unrealized drawdown is if you are increasing your drawdown. Okay, so your third trade, you go in and you go up to $300, and then it comes back down 200 and you exit at $100 profit. Your drawdown is going to increase from 1,500 to 1,600. It's not going to go down by 200 because you're not at the highest point, which was 2,000. So it only stays unrealized for as long as you are hitting newer and newer highs and you're not taking a profit at newer and newer highs. It never does that for as long as you're not at your maximum drawdown, which in this example is 2,000. Okay, so it doesn't matter as much. Okay, don't get too hung up on those two things. What matters more is finding a prop firm where you can thrive and actually be profitable consistently. That's what matters above everything else. Once you find that, all the other things eventually will fall into place. Okay, so I hope you liked this video. If you found some great insight in this content, please like, share, subscribe. Smash that notification bell so that you'll know when other videos are coming out. There's going to be more how-to videos coming out, and hopefully you will learn from them and it'll help you on your journey to becoming a consistent, profitable trader. Take care, folks. Until next time, talk soon.